Hello everybody, my name is Lush Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This video is about what to do in preparation for the next year, 2022, whether you want to do it on December 31st or on January 1st. There's also some once per year checkups that I've included. So what do I do first? Well, I look into my Quicken app, which I update religiously for expenses, income, and stock prices. And I also look into the Qtrade brokerage account. So the first thing I do is to get an overall idea by checking the net worth to see if it's going up. Now mine has gone up by about 1.1 million this year, so I'm feeling pretty good about myself. I will also review portfolio returns in absolute dollar terms. So it went up from 2515K to 3515K, so by about a million. And after removing about 50,000 for the last contract that I worked from January to March 2021, and then the higher than expected proceeds from the sales of a US investment property, I'm able to reconcile the 1 million increase in my portfolio to the 1.1 million increase in my net worth. So that's important to me just to make sure the numbers are making sense. Also, I compare my portfolio against benchmarks. So Qtrade has a nifty tool where you can get a letter grade for your portfolio. And I'm here mostly looking for performance and some income. I'm also beating the TSX handily in the long term with my stocks, so I'm also happy about that. You'll note that my Canadian portfolio is more volatile, both up and down, than the benchmark, which is just fine with me, since it'll outperform in the long run. I will also review last year's spending in Quicken and budget for the next year. The only serious trouble spot is the tax number for me, as you can see. So I will have to chat with my accountant about that because they're much higher than he told me. And this is caused by the prepayments for my personal taxes. These are due to the sale of a US property in 2020, and the CRA has made me prepay my taxes in 2021 for the high amount of income in 2020. There are a few negative amounts where prices went up from the previous year, so I'll have to adjust the numbers in the budget. Since all of these are non-discretionary, there's really nothing I can do about it. There's also some timing issues where the budget is prorating the expenses for the amount of time that's gone by, and the expenses just happened sooner than the budget thought. The next thing you might want to do is set your financial goals for the coming year. So the goals should be posted somewhere. I had a 4 million sign as a goal, and I changed it to a 9 million sign because I surpassed 5 million and I didn't have anything in between the 4 and the 9. And any New Year's resolution should also be posted. Uh, make a plan to invest monthly, for example. And if you're not investing, please start now. Maybe your goal would be to save a certain amount by doing something specific. Most people do general goals like lose weight or be better with money, and surprisingly, nothing comes of it. And they stop trying 2 weeks into the new year. When you think ahead to the end of 2022, what would make you feel accomplished? What if you cut your credit card debt by half? What if you were able to boost your savings account to 4 figures or even 5? Or build up that emergency fund you have had to dip into this year? Think about what you want to celebrate at the end of 2022 and then set some goals to help you get there. I'm a fan of the SMART method of goal setting. A SMART goal is S for specific, simple, sensible, and significant. M for measurable, meaningful, and motivating. Attainable, agreed and achievable. Realistic, reasonable, relevant, and resourced, and results-based. And finally, time bound. So time-based, time limited, and time/cost limited, timely and time sensitive. So for instance, quote, become financially secure, end quote, isn't a smart goal because that statement is ambiguous. Nobody really knows what it means. On the other hand, save 5,000 in my emergency fund by the end of 2022 would be considered a smart goal because it's specific, measurable, and timely. Write things down and share them with people for accountability. That's another tip. Review your spending over the past year and be honest about it. So this is the deep dive into your budget. We know this isn't going to be fun. In fact, it's probably going to be pretty tedious. I'm the only one who enjoys it. Here's a shortcut. If you use online banking or an app like You Need a Budget or Mint, you likely have access to graphs that show how much of your income went to specific spending categories like food, entertainment, and household expenses. However, you can reconcile your spending without digital tools. Why is this so important? It's how to find out where you're actually spending your money. You might think you don't have a single penny to spare, and that's why tumbleweeds are rolling through your savings account. But tracking your expenses can reveal a different reality, one where you've actually spent quite a bit of money on, say, on scented candles rescued from the clearance shelves at Target. If you're having trouble achieving your financial goals and can't figure out why, knowing exactly where your money goes is the first step to bringing your actions in line with your goals. Once you've tracked your expenses, you're ready to move on to the next step. Make a budget that works, finally. Listen, we know a lot of people don't bother with a budget. A survey of 1,500 penny hoarder readers in April 2019 found that 40% of them didn't budget. But you really do need a budget if you are having financial issues. You can try out one of the budgeting apps or go old school with Excel or even pen and paper and set up a bullet journal, a budget binder, or an envelope system. My motto is if it works for you, then it works. So if you do need a budget, then make that one of your goals for this coming year. The next thing is pull your credit reports and examine them for errors. When you go over your credit reports with a magnifying glass, here's what you might find. You might find accounts that aren't yours. It's possible you have accounts on your credit report that actually belong to somebody with a similar name. Do you, Karen Smith, really want to have the overdue charge card belonging to Karen Smythe on your credit report? You could also find accounts you didn't realize were delinquent. Maybe your dentist's office repeatedly sent you the bill to the wrong address until the unpaid bill wound up in collections, leaving a giant black mark on your credit report, and you weren't aware of any of this until your application for a car loan or a mortgage is turned down. Outdated or incorrect information about your accounts could also appear on your credit report. Perhaps you paid off a loan last year that's still showing up as unpaid, or your credit card balance is listed as being much higher than it's ever been. These would significantly ding your credit score, and those three little numbers hold a lot of power over your ability to access credit in the future. All of these errors can be disputed by contacting the appropriate credit bureau. So get the credit score and see how it's moving. In Canada, we can use Equifax, TransUnion, or I use Borrowell. The first two are official Canadian credit reporting agencies, and Borrowell pulls a full credit report from them and also gives you your credit score number. You can apply for all three online. Here are a few miscellaneous items that you can do at the end or at the beginning of a year. You can review your financial plans, including the Excel calculations themselves, and see how you are tracking for retirement in terms of asset accumulation. It's important to know sooner rather than later if you are on track or not on track. Look at mutual funds and make sure that they are still five-star funds and that the blue line in the performance graph in Morningstar is still above the other two lines. Check your fees. Your brokerage or financial advisor will give you disclosures, sometimes with your tax documents or with your statements, to tell you how much fees you have been charged. If you are buying RSPs all year, which you really should be, you don't have to do anything. Otherwise, prepare for RSP season and buy something by the end of February of 2022. If your payroll doesn't know about your RSPs that you're buying, fill out a T1213 request to reduce tax deductions at source form in January to get less tax taken off. So you're not giving the government an interest-free loan all year just to get a big tax refund 16 months later. Next, plan your year in taxes. If you are going to sell something, make sure you know what effect that is going to have on your taxes. Do any tax loss selling, which is selling investments with unrealized capital losses, which can be used to reduce any capital gains already realized in 2021. Sell these now so the transaction settles and completes by December 31st, so sell by December 29th at the latest, so you can offset any capital gains this year. Losses can also be applied retroactively to gains realized during previous 3 years or carried forward indefinitely. I know this is going to be a tough one, but start on your personal taxes, including exporting any transactions from January 1st, 2021 to December 31st, 2021. On January 1st, 2022, start exporting transactions out of your trading or bank accounts for your taxes, organizing statements for your accountant, even though my accountant wants extra 2 weeks before and 2 weeks after the year in the statement. So you can do it in 2 weeks. You can also start getting the adjustments to the ACB for exchange traded funds for deductions. Find the ETF's adjusted cost base after distributions for the year. Your ETFs get distributions in the calendar year that you will pay taxes on, so you need to increase the adjusted cost base on the ETF by the amount of the distribution, so you don't pay tax on the distribution and keep the same adjusted cost base, which would be double taxation. Also, wait for January 1st and then invest all $6,000 into your TFSA in one lump sum to allow the compounding to begin sooner rather than doing it throughout the year or later in the year. And before December 31st, if you need any cash out of the TFSA in the next few months, consider pulling it out now so you get the limit back on January 1st when it recycles, so you don't have to wait a year to get the limit back. Again, the transaction will have to settle by December 31st. So I hope you found these year-end or once per year checkups useful. If you have any requests on what you'd like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.